Good morning, treasurers. This is your host Parthesh Shah, co-founder of Fintech, and you are listening to Night Snippets. Here is all what you need to know before going into trade for 7th December 2020 in the international market. Treasury yields climbed on Friday as disappointing US jobs report boosted expectations for fiscal stimulus. The US economy added 2.45 lakh jobs in November, whereas market expectation was 4.4 lakhs. The jobless rate has decreased to 6.7% from 6.9% in October. 6% is considered full employment. With the lower than expected jobs data increasing the probability of fiscal stimulus, US 10-year closed 5 basis points up at 0.97 and 30-year closed 6 basis points up at 1.73 percentage points. In the crude oil market, OPEC Plus has finally managed to reach a production cut agreement after several days of increased internal dissent. Crude is now trading at $49.03 per barrel. Crude's short-term range is $48 to $50. In the currency market, dollar index DXY is at 90.78. DXY's today's range seems to be at 90.32 to 91.35. Now it seems the DXY shorts will run out of steam soon, and there are clearly early signals of DXY reversal to 91.50. December US financial year end may bring profit bookings in equities or risk off mode, and money can be parked in DXY as safer assets. On the other hand, USD-CNY or Chinese yuan is at 654. USD-INR with a low of 73.69 closed at 73.75 on Friday. USD-INR's range for today seems to be 73.60 to 73.90. Now, we recommend to be neutral until the domestic equities sell-off starts, as USD-INR will be range-bound for short term. We do firmly expect a minor pullback to 74.50, but there are no visible signs yet, so we will look out for signals. In the domestic market, RBI MPC made no changes in repo and reverse repo rates on Friday. RBI Governor Shaktikanta Das Friday firmly repeated the assurances he had given 2 months ago that monetary policy is to remain accommodative and at least for next 4 months, and liquidity is to remain plentiful. MPC also revised central bank's inflation forecast upwards 130 basis points in January to March and 90 basis points in April to June 2021 quarters. Once RBI Governor confirmed that there are no steps to stem the excess liquidity, shorter end of the curve rallied. On Friday, 522 GS 2025 closed at 502 levels, whereas on Thursday it was at 512. 577 GS 2030 closed at 589 versus Thursday's close of 593. The range-bound market is here to stay for some more time, and we expect meaningful yield actions will prevail near the budget. MPC has cleared the air that liquidity is here to stay for a few more months, and that is giving comfort to bond traders. But the traders are very well aware of the fact that this liquidity will get sucked out of system soon, and next year financial year will also see a large amount of borrowings. Hence, even public sector banks are not buying bonds below 585. We at Knight Research still firmly believe the yields will go up in very short time, few weeks before the budget. That's it for today. You were listening to Night Snippets with Parthesh Shah, co-founder of Fintech. See you tomorrow with the new episode of Night Snippets.